So as Danny said, the risk reward here is 114 last month, 165 is consensus here. Maybe we should be a little bit more focused on the unemployment rate and what's driving that.
Well, the unemployment rate is the number one indicator that the Fed has cited for their thinking. Now, the question is, do they care about how far out unemployment goes to 3 digits or whatever? Will that influence them? We are looking at 165,000, as you say, although interestingly enough, you said Wall Street's thinking. Wall Street is thinking 150. That's the whisper number. It's the economists who are thinking 165, which surprised me because we've had a lot of negative jobs numbers in some of the other indicators this week, and nobody has really changed their forecast. But 4.2% is the unemployment rate. That would be a tick down from last time. And there are a lot of questions about whether last time was unusual. If you go under the hood of the unemployment rate, most of what we saw, or a very large part of what we saw in terms of the unemployment rate rising to 4.3% last month, was because a lot more people were listed as on temporary layoff. That is the light blue on the, if you look all the way to the right, actually it shows up on your screen, I guess, as sort of pink mauve, sort of like Danny's jacket color.
I'm matching it, yeah.
Yeah, she matches it. The increase there is expected to reverse. A lot of those people may have been auto workers who were out of work because of plant retooling, and some of it is weather. And if that happens, we could go down to 4.1. If we go above 4.2, that's what's going to scare people. And the question then is, did we go above 4.2 because we got to a rounding situation, or because we got out to 3 digits and rounded up to 4.2 or 4.3, or because we actually saw the rate jump that much?
Got you.
Yeah, so I love every time you give us the jobs data, you need to tell us by like the 100th or even the 1000th of a percent.
It's gotten to that point.
It really has.
Andrew Hollenhorst is here, and we were talking about that earlier before the show. It's like, is this a way to make policy on the 3rd digit?
Okay, but is the Fed making policy based on that, or is this just a market that assumes that they are?
Well, the Fed is going to have a lot of things to think about. I mean, imagine you're in that room. Not only do you have what's the trajectory of the labor market, and what's the trajectory of growth going forward? Where's inflation? But we also have the geopolitical stuff out there, and you've got the election, and we don't know how that's going to influence it. And monetary policy isn't going to hit if they do something till next year. So they've got to juggle all this stuff in there. So maybe a 3rd digit doesn't matter so much. But it'll be interesting to watch today. You look at Fed funds futures and overnight index swaps right now. They've actually come in a little bit, fewer than 1.5 cuts now. So we'll see where they end up at 8:30, and then the yield curve is disinverting again.
Twice in the space of a month,
So where does that go? Things to watch today.